Well, let's start off with trade as it played out on the NSE yesterday. What did you make of the moves and what are your expectations for the trading day ahead?
Well, if I can report, if you can allow me, I'll report about today. I just looked at the market in the morning, and KCB is up by some 2%. Express Kenya also is up, and Safaricom is up to around 3 shillings and 95 cents. Now, on the losing side, we have TPS East Africa, Equity Bank, and a few other shares.
What's driving some of the momentum that we're seeing today? Because from what you've mentioned, those that are ranking on the gainer and loser boards respectively aren't the usual suspects we've been used to over the week that's progressed so far.
Well, what has been happening in the market for the last few days is a movement on the side of foreign investors, taking positions to either take advantage of corporate actions that happened in the recent past, or a lot of others, taking advantage of the market sentiment right now. Just take you back, we have Safaricom, which is closing books on around 19th of August. And we have seen the price performing strongly. We have the share at around 3 shillings and 95 cents now. My expectation is that as we count down towards that date, there is a likelihood of the price going even beyond 4 shillings.
Let's take a look at this foreign investor interest, because if we look at turnover yesterday, it was certainly high turnover being reported, roughly 125 million shillings there, 62% of that turnover coming from foreigners in particular. What's igniting interest here? Because to a large extent, this is what's driving the demand that we've seen.
Well, my understanding of foreign investment is that, if you look at the Kenya shilling exchange rate to the dollar, for example, you can see that, foreign investors can invest quite a bit of Kenya shillings in this market and be able to take advantage of marginal improvements in price. And my thinking is that that is the factor behind what we have been seeing in terms of foreign investor participation in this market.
At the same time, we've got institutional investors adopting a wait-and-see approach at this stage. Is this merely them taking a cautious approach to the markets, or are they in fact looking at valuations a little differently to what their foreign counterparts are viewing right now?
Yeah. For fund managers, my thinking is that over time there has been some serious volatility in this market. And some of them may be holding a lot of these shares at fairly higher prices than what the market is performing right now. So the expectation is that they are waiting for a lot of these shares to hit prices that the books are showing before they can start showing a bit more interest in the trading in the market.
Well, this week has certainly been very eventful in terms of corporate earnings reports. Most numbers in line with expectations, if not slightly below. But we had Standard Chartered, one of the companies really shooting the lights out with its results. Would that stock be amongst one of your stock picks for this week?
Well, yes, but to add to what you're saying, the fact that the performance of Standard Chartered surprised quite a number is a point of the fact that conservative approaches in a market that is fairly depressed would be yielding some returns. Just to take you back, a lot of other banks are also looking at possibilities of investing more in government securities, just to take advantage of the fact that when the market is not having a clear direction, and when you are expanding your loan book and you're not sure about what the interest rate behavior is going to be in the near term, you've got to be a little careful. And I think that is what a lot of the banks are doing right now.
Of course, one of those examples is Barclays Bank increasing its exposure to government securities. Looking ahead to next week, Justice, we've got a cooperative, CFC, Stanbic and Equity as well, expecting to be releasing results. How do you see these counters performing ahead of those results, given the fact that we've seen already a slew of banking companies actually setting the tone for the road ahead?
Yeah, I agree with you. There's a tone that has already been set. For Equity Bank, the management had indicated that they're expecting an end-year growth of between 30 and 40%. And my expectation is that we can expect anything above 20% growth. But of course, that's not cast on stone. For Cooperative Bank, the first quarter results had shown a growth rate of about 29%, if I'm not wrong. And my thinking is that we are likely to see a growth rate of just above, maybe 20%. For the rest of the banking sector, my thinking is that, well, that is one of the sectors that have been performing fairly well, because if you look at manufacturing, the fact that we have now had power rationing coming in is likely to impact on the capacity of those organizations to make extra earnings. So at the end of the day, even with the mixed results we are getting from the banking sector, it still looks one of those sectors that should be carefully looked at and chosen as one of the counters one can invest in.
Okay, well, let's take a look at Justus and shift focus here, looking at the tea producers, because while we've had the banking players really standing in the spotlight in account of all the reports that they've been releasing this week, tea producers have been pretty active themselves, and amongst those, Kapachura tea, Williamson tea even, which is partly linked to Kapachura, really seeing a lot of activity there. What's been driving some of the interest in tea producers that have been pretty dormant for a while now?
Well, of course, in terms of what reports have been coming out, there is information that the export earnings for tea have been going up, but the production has gone down in a market manner. And for Kapchorwa and Williamson tea, my thinking is that, you know, over time we have had this seasonality where sometimes the companies report very good results and another time there is some serious earnings loss. So if you look at the latest earnings for Kapchorwa and for Williamson tea, the earnings have been good. That is for the first half of the year, if I'm not wrong. So the fact that they also declared some dividend is an indication that that sector is doing well in terms of earnings, even though we are seeing production going down. So as we count down towards the end of the year, the expectation is that there is not likely to be significant changes in terms of how output is going to come in, because we still have a lack of rainfall in this region. But in terms of earnings, I think prices have gone up, and we expect that to continue until the end of the year.
Well, certainly the latest tea report that has been released has signaled that tea companies might have sold less tea in kilograms, but they've certainly earned more in US dollar terms. That being the case, agriculture being a major revenue earner for Kenya, and many Kenyan companies reporting better second quarter results compared to the first quarter. What's your economic outlook for the second half of this year, and what sectors do you see rebounding significantly as we move forward?
Well, all that will depend on how the rainfall behaves. Given the fact that agriculture predominantly depends on how much rain we get, given the fact that we don't rely a lot on irrigation. So at the end of the day, for the output, I'm expecting some marginal drops in a lot of the products we have, like tea and coffee. But in terms of earnings, I think prices are likely to improve, given the fact that the supply in the international market is likely to face some challenges. Remember also that Kenya is the largest producer of black tea in the world. And given that fact, and given also the fact that the supply is not likely to be as much as we had last year, definitely prices are likely to be pushed upwards.